Hey everyone, welcome back. You ready to dive in?
Ready when you are.
Awesome. So today we're going to be talking about Bitcoin.
Of course we are.
It's been quite a year for Bitcoin, to say the least, especially since spot Bitcoin ETFs finally launched.
Yeah, big changes.
Right. And we've got a ton of great sources we're going to be pulling from today. We're talking big names like Investopedia, the Financial Times, Barron's, even the Australian, for a little tech perspective.
And always got to have a little crystal ball gazing.
Oh, absolutely. Got to see those market projections. So buckle up, folks, because we're going to cover it all. ETF inflows, miners feeling the squeeze, wild price swings. Oh, and can't forget the Fed lurking in the background.
The Fed's always lurking.
Always. But let's kick things off with those ETFs. I mean, $36.2 billion flowing into spot Bitcoin ETFs in just 1 year. That's wild.
Absolutely bonkers. Talk about a game changer.
Right. And, iShares Bitcoin Trust, IB.
Yeah.
It's like the rock star of ETFs. Hit $50 billion in AUM in under a year.
Fastest ever.
Fastest ever. But then you've got Grayscale's Bitcoin Trust, GBTC, hemorrhaging over $21 billion.
What's going on there?
That's the million-dollar question.
Yeah.
What's pushing investors towards those newer ETFs and away from stuff like GBTC?
Well, IBT has lower fees, for one. Plus, with spot ETFs, you've got that transparency.
You mean?
They're actually holding the Bitcoin directly, which is different from a trust like GBTC.
Ah, okay. That makes sense. So more money pouring into Bitcoin, definitely affecting the price.
Right.
But let's shift gears a bit and talk about the miners. They're kind of the unsung heroes of the whole Bitcoin world, right?
Totally.
But the Financial Times is saying they're facing some serious challenges.
Oh, yeah. Even with Bitcoin flirting with $100,000, it's not all rainbows and sunshine. First, you got the halving.
Halving? What's that?
So every 4 years or so, the reward miners get for processing transactions gets cut in half.
Ouch. So less Bitcoin for the same amount of work.
Exactly. And then on top of that, you've got sky-high energy costs and all this new competition, even from AI companies gobbling up computing power.
So how are they surviving? What are they doing?
Some are hoarding their Bitcoin, basically stockpiling it, waiting for prices to go up even more, and some are going global.
Global.
Looking for cheaper energy overseas. Some are even renting out their computing power to those same AI companies.
Whoa. Turn your rival into a customer, huh? But speaking of location,
Yeah.
didn't Texas just crack down on energy data for miners?
Yeah, they're getting strict about reporting requirements. So costs could go up in Texas, maybe even force miners to move elsewhere.
All right, so we've got ETFs going wild, miners getting creative. But now, let's talk about everyone's favorite topic.
Hit me with it.
Bitcoin's price swings. Barron's is saying it could go to $200,000 or crash down to $70,000.
The roller coaster never stops.
Seriously. So what's driving all this craziness?
Well, there's always the speculation. Like right now, people are buzzing about Trump's comeback and what his crypto policies might be.
Oh, so politics are in the mix too.
Always. Plus, Bitcoin's got this weird link to tech stocks. So when tech gets spooked,
Bitcoin goes down with it.
yep, it's definitely not your grandma's safe haven asset like gold.
No kidding. So all this volatility makes understanding those price drivers super important.
For sure. Like, is this volatility here to stay? Will things calm down eventually? And what about this idea of a strategic Bitcoin reserve?
Yeah, what?
Like governments and big institutions holding Bitcoin as a reserve, could that change the game for prices?
Interesting. But you know what's interesting is amidst all this volatility, institutions are starting to dip their toes in.
Oh, yeah.
The Australian was talking about AMP. They just put $27 million into Bitcoin,
That's a big deal.
right? Shows that mainstream finance is starting to take it seriously.
Definitely. And with regulations maybe getting friendlier and whispers about potential Fed rate cuts, who knows? Maybe we're heading into a golden age for Bitcoin.
Maybe. So for folks just getting started, any advice from our experts?
Do your homework. Stick to reputable exchanges. And think about cold storage, keeping your Bitcoin offline for safety. Oh, and diversify. Don't put all your eggs in one basket. Look at ETFs or equal weight strategies.
That's when you put the same amount of money in each asset, right?
Exactly. But here's the thing. We can't forget about the bigger economic picture.
What do you mean?
The bond market. MarketWatch is saying rising U.S. Treasury yields are putting the squeeze on riskier assets, including Bitcoin.
So when yields go up.
Investors run to safer bets. Bitcoin took a 4.7% hit recently. Analysts are watching that $92,000 support level closely.
If it goes below that.
Things could get dicey. Plus, the Fed's talking about slowing down easing and maybe even more rate hikes. Makes people nervous.
So basically, lots of moving parts affecting Bitcoin.
Tons. It's been a crazy year.
So to wrap things up, what's the big takeaway?
It's been a wild ride for Bitcoin, that's for sure. Record ETF money coming in, miners adapting, and that price volatility. Well, it's driven by everything from regulations and big institutions jumping in to global economic trends.
So much going on. But that leaves us with a big question. What is Bitcoin really? Is it just for speculation? Is it a store of value? Something else entirely?
That's something you'll have to ponder as you keep exploring the fascinating world of Bitcoin.